This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, February 9th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and I'll be sure to get to it during the show. Overnight markets here, March corn down $0.0125 at $4.29. March soybeans are down 3/4 at $11.14.5. And March Chicago wheat was unchanged at $5.29 3/4. This morning we had an export sales announcement: 264,000 metric tons of soybeans to China, and that was for 25. Also, we are now through 5 of 19 settlements for our spring crop insurance discovery period. Corn is currently averaging $4.58. That was up a penny from the previous day's settlement. Soybeans are $10.87, averaging $10.87 now. That was up another 2 cents from the previous day there. We will have a USDA report out tomorrow, 11 o'clock Central. So why don't we start there? Dustin, good morning. Hope everybody enjoyed the Super Bowl in spite of the game. It's good to see a good wrap on football for the year, but now we'll move on to discussing our stuff. Like I said, USDA report tomorrow. We continue to grind through. I think we're, close to 30% set on our spring crop insurance prices, which is hard to believe. It's coming fast. So maybe share a few thoughts and we'll throw around the room.
Yeah, good morning, Dan. Thank you. Yes, report on Monday. Generally, the biggest reports are going to be your Jan report, your March reports, and your June acreage numbers with updated June stocks. And so, coming off the Jan report, we don't really expect a lot of major changes. I think the market reacts anyway at this point in time, just because it kind of is just another benchmark to get past. This is a very critical month, though. I think that all of those bushels that got delivered through December and January that are sitting on basis only right now, that needs to square up. And when you're talking about the most number of bushels we've ever had by about a billion, a little over a billion bushels, you just got to think about all the extra basis only contracts that have probably been written. And that's something I'm just a little concerned about. If you need to make changes between now and the end of the month, that's a big one to kind of watch. Outside markets are, very fragile too. We've got gold back up today, major, earthquake things happening in Japan. We've got their 30-year rate higher again overnight. So I think watch out for outside markets. Look at the geopolitical activity. We've got a huge arsenal, in the Middle East right now. Chances for a strike on Iran are back to the highest they've been all in the month of Feb. So I think that, watch out if something like that erupts, right? I actually don't know what the response will be. I think crude oil would jump. What did grains do in that situation? So if it's a risk off tail event, I really couldn't say whether that's bullish or bearish. I mean, naturally you'd think bullish because crude oil is likely to go up, but it's a lot of moving markets. I would just say don't get too comfortable right here. I think, one good thing is that insurance price is getting established right now. We know that that's going to provide a measure of comfort going into the year. And we've got Farm Bill, of course, but if those things were not in place, I'd be probably a little bit more concerned about new crop. There's really not as much in place for old crop, however, right? That's the one that probably has a bigger concern in my mind.
South America, we could see some adjustments just in South America. Be interesting to see what the take is there, if they kick the can or if by, private estimates continue to increase Brazilian crops. So that'll be something I think we'll watch too, right?
Yeah, so I think the last USDA report had Brazilian corn at 131, private estimates 132.5, so up 1.5 million metric tons. Beans, the private estimates 179.39, up 1.39 from the last USDA report. Those wouldn't surprise me, but you got to remember USDA is usually they drag their feet on changing Brazil up or down. Like the private estimates usually are a lot more volatile than what the USDA will write down.
Sure. What's on your mind this morning?
For me,
You're Ben.
I broke out for there for a second. I didn't hear your name. Just kind of echoing Dustin's sentiments. Typically, if you come out of that January report and there's no big earth-shattering news, selling vol from then up until the third week of February was historically pretty good trade. Call it 8 out of 10, 9 out of 10 years. And then you'll see vol start to firm up heading, third weekish of February as we get a little bit closer to the growing season. Grains get a little more, I think, on people's frontal lobe. What I look at, and I see how beans moved last week off of a tweet, and you probably certainly had a lot of people leaning to the bearish side. But South American harvest was is getting in full gear. Probably a lot of vol sellers that were willing to tempt the market, and one tweet, and they get run in. And I asked myself, what would it take in corn to do something similar? So I think being short options outright, if not part of a greater strategy, is probably not a good play right now. It may work, but I think you're tempting fate a little bit for all the reasons that Dustin mentioned. And adding on top of that, President's tweet can run everyone in. Now, granted, the supply situation in corn and soybeans are wildly different. But we could certainly clear out if we cleared out a lot of corn that's tributary to the PNW, we could make corn probably a little bit more of an exciting market pretty quick. And if everyone is kind of leaning one way right now, it makes the market even that much more vulnerable to some sort of an event. So I just don't like the risk return on being short options, I guess.
Very good. We've got a couple minutes here. We'll move over to livestock. Ryland, Friday's executive order that was signed by President Trump regarding Argentine beef imports. I know we've had the weekend to kind of digest and go through some of the details. And I guess on the surface, there could be it could be a bigger deal if it signals kind of a new way of handling higher beef prices. But on this individual deal, really doesn't appear like it's going to move the needle that significantly, at least in our minds. And then hogs, touch on the hog open interest, which is knocking on the door of being a record there as well. So why don't you start us off with the livestock for the week?
Yeah, absolutely. I mean, the market was really strong to start Friday, and then that news of Trump signing the executive order to pretty much solidifying the quadrupling of beef imports from Argentina. So, I mean, in terms of overall volumes, it's not much, but I mean, this could pave the way for larger exposure, to the market. So obviously Trump's agenda to get beef prices lower, this is definitely going to move that in a certain direction. But on the other hand, I think there's a lot of cynicism surrounding just how the packer is going to handle, essentially dispersing this beef amongst the populace and how much of a difference it's really going to have on prices. I mean, obviously bigger volumes from other regions as well, Australia, Brazil, Canada, all these other regions are going to be more significant, but as of right now, we know high beef prices is a problem for the consumer, but what impact does it have on the producer? Obviously, that's the big fear right now. So I think we did see that sell off kind of late on Friday with it, but overall the volumes just aren't that big yet. I think this could pave the way for more volumes and tonnage down the road. But I have a feeling that's years in the making. So I don't think it's going to have any real immediate impact, but it's kind of a wait and see like how this goes. And especially just as seasonal time frame for beef right now is like we should be at kind of a lull, kind of a lower price seasonally, just everything kind of remaining the same, and then start to gravitate higher as we get into bigger demand time frames into grilling season. And I think everybody's still expecting retail prices to hit a new record come the summertime. So we'll see if this Argentina volume really starts to eat into that by any stretch. But late on Friday, obviously Packers paid up to $2.45 for cash in some areas. So this is generally $4 to $5 higher. So after that news, I think we're going to have to digest those higher cattle prices in general. So I think you get a little bit of a whipsaw here on the open, but the cash news is still very favorable. New high for the move here. I mean, just really strong prices. So at least at this point, Packers are still willing to pay up. So I think that's probably getting to us, at this point. And at least on the pork side of the market, on the hogs, I mean, you had a really strong, similar kind of price action, right? You had a really strong rally to start and just kind of finish late. And overall, managed money still really kind of just jumping in here. I mean, 15,000 contracts of net longs added the previous week. So we're at 128,000. So this is a massive position. This is catching up to their record at about 147,000. So, I mean, it does feel like there's a really big, it's trading like a demand bull at this point. I mean, and overall, it just feels like we may have a supply problem down the road. We may not, but obviously these are great prices. You're hitting, contract highs in the front end of the market in the summertime. I mean, at this point, margins look fantastic as we get out there. So I think just overall, the trend is your friend here. Path of least resistance is higher. We could definitely see a setback. We are in that kind of weaker seasonal time frame, just demand in general over the next several weeks. But after that, you really start perking up here. So we'll see if that remains true.
Very good. Appreciate the update there. Also, as I mentioned earlier, there will be a USDA report tomorrow. That'll be out at 11 o'clock Central. For our premium subscribers, we will have our reaction to the report and a breakdown of what the USDA comes out with there. So be sure to check that out. To get that premium content, check out the War Room report. You'll notice that in the comments there, we've put up the link. It will get you a deeper dive, in-depth look into the things that we discuss on the War Room across all markets there. So be sure to check it out. In addition to that premium content, 10% of all the subscriptions go to support the AgYield NextGen Foundation, supporting the next generation of leaders in ag through our national scholarship competition. So we're really excited about that. We'll be having our first competition here in April, and so there'll be more information to follow on that as well, but we're really excited about that. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.